All right, welcome back. You know, it sure does feel like the market's trying to brush the last few weeks of volatility under the old rug, right? Nothing to see here again. Please just move along. But with my 37 years in the business, I'd say it's just not really that easy. Now, Warren Buffett saw something in the tea leaves and sold a big chunk of his position in Apple, and now it's back up 30% since those sales. Nvidia, that's up around 40% in 2 weeks, and everybody's really happy. Everybody's talking about how Nvidia gained another 4.5% just recently, and it is now up again 40% since those lows. And that low was August the 5th, not too long ago, right? That leaves the impression that they didn't panic 2 weeks ago when the bottom appeared to be really falling out of everything. They tried to convince you that the AI story was all but over. Remember how the news over that weekend that Warren Buffett sold half of his Apple position caused so many to ask, what does he know? If he's selling Apple, then should I get out as well? Well, how'd that work out for you? Now, to say it's just that easy, it's not that simple. The markets have been rallying regardless, and they focus only on the good. But what happens when they actually do cut rates, right? When we finally get the fact, not just the fiction, but the fact. My next guest, he's a stock guy. Please welcome to the show, Mr. Craig Bolanos. He's the CEO and co-founder of the Wealth Management Group up in Chicago. Thanks for being on, Craig. Yeah, it's almost like nothing to see here. It didn't happen. Let's move along. We don't want to remember what just really shook us to the core.
Nothing to see here. Wait, what about the unwinding of the yen carry trade? That's what caused death and destruction to the market starting on the 31st of July. But I'm even more recent, Scott. We've had not one, not two. We just did 8 straight days of rally. That hasn't happened since I don't know when, but if you ask me, is today going to be positive? No way, because we haven't had a 9-day win streak for almost 20 years. That'd go back to November of 2000.
Is it really that long?
Oh, it's been that long. Yeah, it's that tough to put 9 straight days together. And let's look at the setup here. I mean, we got a 76% chance of a Fed cut on September 18th. That means there's about a quarter of a chance of 50 basis points. Business spending, it's plateauing. The employment, it's softening. But overall, listen, it's all still healthy. And if you want a recipe, I think this recipe still is kind of as good as it gets. And that's why people should stay invested and not get whipsawed.
Yeah, I mean, that's if you have a 3 to 5 year time horizon. That you're, like I say, the Fed's not going to let the market go down, at least not yet, because of everybody screaming for rate cuts as soon as they see a 5% sell-off. And that's a whole other story that we'll do in another time. But, you know, do you find, we blamed that last sell-off. It really kind of shook the non-farm numbers, what people really reference. But it really wasn't that. It was what you opened up with. It was that yen carry trade really kind of unwinding. But what I don't like about that, too, is the fact that what did the Japanese raise their currency? What was the interest rate they raised it by? It was, what? A very small.
I'm not sure what
it was a very small amount. But it was a tiny raise in the Japanese interest rate caused that much havoc. That is what we should be worried about. That's what I would say.
Well, in fact, I'll actually double down on my statement. Everyone likes to think about non-farm payrolls because everyone always wants to find easy solutions, Scott. But there are always crowded trades in this market. And if you were to ask me who's the most important speaker on the planet right now, everyone's going to say it's Jerome Powell and Jackson Hole. No, I think it's the meeting that's going to happen on Friday at the Bank of Japan. Because what if they come out and move away from their recent commentary that launched 8 straight days of rally? And what if they re-spark worry that they're actually going to raise interest rates more aggressively than we planned? That'll re-blow up the yen carry trade and re-blow up this stock market. So I'm not paying attention to Jackson Hole. I'm paying attention to what's going to happen on Friday.
And you make a great point, and I love that because if they raise interest rates in Japan, that makes their currency stronger, and that forces some people to get out of a trade that they had been borrowing cheap yen, and they gotta give it back, right? They can't afford that trade anymore. So let me ask you this then, Mr. Bolanos. If we have Jay Powell, the second most important person right now, says that we're going to be cutting rates, doesn't that by de facto make the Japanese yen stronger because we're going to be making our currency weaker, and that would still exacerbate that problem? Yes or no?
Yes, it does. But again, these rate cuts are built in. I was very clear to say it's a 76% chance of that quarter point cut on the 18th of September. So directionally, you're right, but it all comes down to what's baked in and what's not.
The old expectations game. I get that because
Yes.
then after that yen hike they had a couple weeks ago, that's when we missed on the expectations of the non-farm payroll number, which really kind of was the match that lit the whole thing and blew us all up after the yen carry trade. So, where do you stand here? I mean, are we through it all? 8 days in a row higher makes everybody happy, and we're not going to be worried about this market selling off anymore going into the end of the year?
I'm clearly worried about the market selling off in the month still of August, September, and October, because historically that's when it gets tough in these election years. But two points. Number one, we have seen a return of robust demand, the likes of which we first saw on November 3rd of 2023. And look at how big the rally has been since then. That same level of demand has returned. And point number two, I want everyone, because it's football season, Scott, Hard Knocks for the Chicago Bears preseason. Here's my state of the economy. You ever been to a football game, Scott, where your team's winning by 3 touchdowns? So what do? You get up, you go to the concession stand, you get a couple beers. Next thing you know, you come back, you're only up by 1 touchdown because your team just threw a pick six and fumbled the ball at the goal line. Here's where I'm going. We're still winning. We're just not winning in this economy the way we once were. And up until we have a legitimate growth scare, I'm not changing my tune. I think people should be long this market and ride the trend.
All right. Well, I want you to turn on the show here after we get off, because we're going to talk about the leading economic indicators that have been slowly but surely declining here for a while. We're going to talk about that next with Mr. Jim Urio. But we appreciate having you on. Thank you. You made me feel a little bit better, so you can climb down out of my worry tree. Appreciate it, Craig. Thanks very much. Craig Bolanos, he's the CEO and co-founder of the Wealth Management Group in Chicago. All right. By now, you know, I got my go-tos, right?